America is still on sale, and for savvy investors, that's an incredible opportunity. The question is, how do you set yourself free from the shackles of Wall Street so you can take advantage of these once-in-a-lifetime real estate opportunities that will supercharge the growth of your retirement nest egg? Well, here's my promise. By the end of this video, you will understand how it is possible to invest your retirement money into all types of real estate, and you will discover the best method for you to do so. In the next few minutes, I'm going to show you just how easy it is to have 100% checkbook control of every penny of your retirement money so you can easily and quickly invest in juicy real estate deals and rake in thousands of dollars in profit. I'm also going to reveal the legal strategy that turns your retirement plan into your own private bank, so you have the extra money you need right now to take care of some immediate goals. So who am I, and why should you listen to me? My name is David Cole, and I've been a professional pension consultant for over 20 years. I've had the pleasure of teaching hundreds of other professionals such as CPAs, financial planners, and attorneys how to help their clients take back control of their retirement future. My board of advisors includes CPAs and attorneys who contribute their knowledge and experience, which ensures that our solutions are state-of-the-art. As a real estate investor of 30 years, I really enjoy helping fellow investors to step back into the driver's seat and steer their retirement plan toward the goals they have set for themselves. It's my pleasure to introduce my expert legal resource for self-directed retirement plans, the Gartland Law Group. They are a nationally recognized tax law firm who provide expertise in both proactive home-based business tax planning as well as self-directed retirement plans. I'd like to tell you just a little bit more about the firm's founder, Bernie Gartland. I've known Bernie for a long time, and he is a fascinating person. Bernie is the former Deputy Attorney General of the state of Delaware. He has a master's in taxation and is nationally recognized for his knowledge as an IRS tax resolution expert. The Internal Revenue Service themselves selected Mr. Gartland to prepare an all-inclusive manual on federal tax liens. He's highly sought after as a consultant for enrolled agents, attorneys, CPAs, and tax organizations.
Presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware, and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hey everybody, it's Bernie Gartland. The name of the program is Taxes, the IRS, and You. And we present this program every single week to give you information that you may not hear from other sources. Normally we talk about people who have tax problems and credit problems or creditors hounding them, and we go into how to avoid them, how to handle them, how to get out of debt structure, how to get the IRS off your back. But that's not what we're going to talk about today. We're going to talk about something very positive. Dave Cole is with us in studio today, and he is probably the foremost expert in structuring retirement programs. And he's going to give you ideas for those of you who have money available to invest and how to instruct a retirement program that's going to be to your advantage. So welcome, Dave. And why don't you tell us a little bit about yourself and what you do with the structuring of these retirement programs?
Well, first of all, Bernie, it's a pleasure to be here today.
Thanks
for having me.
Right.
You know, for the last 15 years or so, I'm one of those guys that people don't know about that's behind the scenes teaching the professionals. You know, when people go into their CPA or their financial planner, they're there to solve their personal issues and challenges. And they're saying to them, this is what I want to do. Show me the tools and how to do it.
Right. Right.
And so a good tax professional or financial planner who cares about their client is going to dig until they find those tools. Well, they come to classes like the ones I conduct. So I teach realtors.
So the professionals are coming to you on a continuing basis for instruction.
So let's dive right in and explore the two self-directed retirement plan options available to you so you can be ready to harvest an avalanche of real estate profits from the hottest market in history. First, an overview of the most common program real estate investors are attempting to use, the Self-Directed IRA, or SDIRA for short. Self-directed IRA custodians allow investors to direct retirement funds into other types of so-called alternative or non-traditional assets. In other words, investments not provided by Wall Street. Real estate is an asset class allowed by most self-directed custodians, and for many investors represents their first attempt towards repositioning their retirement dollars in line with their focus and goals. So let's talk about the process of finding and working with a self-directed IRA custodian. Number one, you have to choose your custodian, and you want to pay particular attention to their ongoing transactional fees. You will then transfer your previous IRAs and 401ks to fund the new account. And as the IRA account owner, you are responsible for selecting your own investments. This, of course, includes real estate. Purchasing an investment requires filling out the custodian's paperwork and making sure that all of the information and instructions are complete. Otherwise, the investment will be delayed or you could miss out entirely. You also will find it necessary to coordinate all parties associated with the investment, the realtor, the title company, inspections, appraisals, etc. Now, a lot of people ask what this type of account works well for. What type of investor can work well within this self-directed IRA custodian arrangement? And I would have to say that this type of account works very well if you're what I call a mailbox investor. Now, this is a person who parks their money in real estate opportunities, earning a steady rate of return, so that they have their time free to devote to other areas of their life. Now, in this case, there would be very little activity, so there will not be much in the way of ongoing investment expenses. However, if you're a hands-on investor, sometimes you struggle with the self-directed account. It may not fit how your style of investing because you do not control your money. The custodian does. So you may not be able to move quickly enough to nail down a juicy deal before other investors that have their checkbook in hand. You have to wait on the custodian to process your investment request and all supporting documentation. There's a couple of other additional points you should consider also. A custodian has the legal right to refuse to buy an investment for your IRA, especially if they don't understand the structure of the deal. And secondly, you have to watch your investment and maintenance fees closely. They can add up fast, which can put a serious dent in your return on investment. Now, here are some examples of some of the fees charged by custodians. If you have a self-directed IRA custodian, read very carefully or review again your agreement for all of these types of fees. There also is something that's being charged, which is a trailing asset fee by some of the custodians now, which means they charge you more money as your account grows in value. It's hard for anyone to assess what your fees could be, but some reports suggest between $1,000 to $2,500 a year, depending on your level of activity in the account. You also have worked hard for your nest egg, so you should carefully consider how safe it is from creditor and legal attacks. Here is an article in Los Angeles Times, December 2013. IRAs could be fair game in lawsuits. It says your retirement nest egg may be more vulnerable than you think. Most states, including California, fail to provide regular individual retirement accounts and Roth IRAs with the kind of ironclad protection from creditors that is afforded pension benefits and 401k plans. That means, depending on where you live and how you've saved, you could lose some or all of your retirement money should you be sued or file for bankruptcy. Now, in conclusion, a self-directed IRA account can work for real estate investing, but you must be very proactive with anticipating the possible delays, the processing timeline, and ongoing expenses of the custodian. And I'm going to share some good news with you. And this good news is the fact that Congress opened the door to a different self-directed retirement plan option clear back in 2002, 12 years ago. So this is nothing new. This is when Congress introduced the personal 401k plan, or what's called a one-participant 401k plan. This easy-to-use plan gives hands-on real estate investors the flexibility and freedom they need to be successful. Now, for the first time ever, people just like you and I could control our own money, eliminating the slow and costly IRA custodian. So here's a quote from the IRS under one-participant 401k plans. It says, the one-participant 401k plan is not a new type of 401k plan. It is a traditional 401k plan covering a business owner with no employees or that person and his or her spouse. These plans have the same rules and requirements as any other 401k plan. Now, when you have a personal 401k plan, you can move quickly to nail down an opportunity while keeping the steps to do so as simple as possible. So let's go through these. These are the benefits or the additional features over and above a self-directed IRA that makes it so attractive to hands-on real estate investors. Here's feature number 1. No custodian required. You are allowed to be the trustee, the manager of your personal plan. This eliminates the frustrating delays of being forced to operate through a third-party middleman. Number 2, 100% checkbook control. As the authorized trustee, your 401k checkbook is in your hands. Every penny of your retirement money is available with a stroke of your pen. Found a sizzling deal? Nail it down on the spot. Number 3, more investment horsepower. Simplify your life by transferring all of your scattered retirement plans into your personal real estate 401k plan so you have more money to work with. More capital equals more deals, which equals more profit for you. Number 4, don't forget your spouse. The plan allows your spouse to transfer their retirement monies into the same joint 401k account. Together, you control every dime in the account for investing, which saves the cost of a separate retirement plan for your spouse. And number 5, protect your nest egg. Your 401k plan is regulated by federal law, which mandates the plan's asset protection. This provides an excellent fortress against creditor attacks, frivolous lawsuits, and even bankruptcy. I promised you that I would show you how to turn your retirement plan into your own private bank, and you're going to love this. You can borrow money from your 401k and use it for anything you want. Your credit scores don't matter. This is a private loan between you and your 401k, so it's not reported to the credit bureaus, thus keeping your income to debt ratio unchanged. And I want to clarify that this is not investing. This is a personal loan to you for other purposes that you need it for, whatever it may be. All of the money left in the 401k is still available, every penny, for investing purposes. So this, again, is just like a personal credit line for your own use. Now, you can borrow up to $50,000 anytime you wish. The tax code allows a 401k to loan a participant, you, money, and you have 5 years to repay the loan with either monthly or quarterly payments. The current rate is 5.25%, which is earned by your plan. If your spouse has money in your 401k, they can borrow too. So a couple could conceivably have a $100,000 instant credit line at their fingertips anytime they need it. And again, this is for things that you want to do outside the plan. Any money left inside the plan is still available for whatever investing purposes you want to do with it. So, 6 months ago, Tom and Susan discovered an awesome house for creating a real estate note. They decided that they want to own this note themselves and pocket the $20,000 profit. But the problem is they don't have enough cash to pay for the house, and their less than perfect credit won't allow them to qualify for a mortgage. Their personal 401k plan came to the rescue and solved their problem. Would you like to know the exact steps Tom and Susan took to make this happen? Well, during your free consultation, I will show you how you can do the same exact thing and have your money in your hands in just 15 minutes. So to recap, how would you like to be able to do the following? Have 100% control over every penny of your retirement money. Invest in virtually any type of real estate opportunity you desire. Nail down juicy real estate deals the moment you find them by simply writing a check. Build a massive retirement nest egg together with your spouse. Protect your nest egg from financial predators and have anywhere from $50,000 to $100,000 instant credit line available anytime you wish. Now, I'm sure you have questions as to how this might work for you in your particular situation, so there's an easy way to get all your questions answered. Reserve your private consultation, and I will answer all of your questions so you can decide which plan is better for your personal use. By the way, I'll also show you how it is possible for all of your investment profit to be tax-free forever.